Good morning, students. In our previous session, we looked at the introductory aspects of cash flow statement. And we observed that cash can flow in and flow out of business on account of operating activities, investing activities, and financing activities. So there can be cash inflow and there can be cash outflow. In case of operating, from sales and from debtors, whatever cash received is the primary source of cash inflow, and cash can flow out because of your payments towards purchases and employee benefits and other expenses. And in case of investing activities, cash can flow out, cash outflow due to purchase of assets and investments. And cash can flow in when there is some sale of asset or investments. Similarly, when the company raise capital by issue of shares, or additional capital put in by the owners in a proprietor firm, or buyback. Here it is all cash flow, right? Here it is cash flow. So in that case, when redemption happens, when redemption of shares, redemption of preference shares and debentures happens, and issue is normally inflow. So when we talk in terms of inflow, when shares are issued by a joint stock company, cash can flow in. So all these are cash inflow, reasons for cash inflow, and these are the reasons for cash outflow. Okay? When in case of a sole trader concern, the owner or partners, when they put in money into business as capital, so additional capital or if it is a new business, capital introduced by them will be the source of cash inflow in case of financing activities. And in case of outflow, it can be repayment of debt or buyback of shares or payment of dividend. Dividend is nothing but share in profit to the supplier of money, maybe the shareholders or the investors. Dividend and payment of interest in case of borrowings. Okay, finance cost, interest is otherwise called finance cost. Similarly, here the inflow can occur when you make investment in shares and debentures of some companies, you may get dividend or interest income. So these are the reasons or the sources from where cash inflow can happen in an organization, in a business concern, right? And these are the purposes for which cash may go out of the business, cash outflow. In case of operating activities and investing activities, and in case of financing activities. So these are the three broad areas in which the cash inflows and the outflows are classified and grouped to prepare the cash flow statement. Today, we will consider a question to understand as to how to prepare the cash flow statement. Prior to that, how to calculate cash from operations. We will go by first categorization, that is cash from operating activities. How to calculate cash from operations. This is one of the important requirements for preparing cash flow statement. Okay, three activities based on which cash inflow and outflow is categorized. First, we are going to deal with how to calculate cash flow from operating activities. So when it is operating activities, cash can flow in because of sales and cash received from debtors cash from debtors, and on account of payment towards creditors. So in a question, you will have information with regard to revenue, nothing but sales from operations. And here in this question, there is no other income. So the total revenue is given as 2,20,000. And the materials consumed, the cost of materials consumed is given as 1,20,000. And employee benefits, all these are part of income statement. Okay, in an income statement, you will find all these information. This is an income statement for the year ending 31st March 2015. So during that year, the sources from where they managed to get, income statement will not reflect the cash aspect. Okay, it will simply show the revenue. Some part of revenue may be cash. If it is committed, in a question, if it is given 20% of sales is cash sales, then we have to allocate out of sales 20% towards cash sales, and the remaining 80% to be presumed as credit sales. And out of 80%, if 20% is given as cash, the remaining 80% to be taken as credit sales, and out of 80%, some portion would have been received this year, some part of money would have been received this year, and the balance may be received in the next year. So we have to find out what exactly the amount of cash received for the current year by considering receivables, opening and the closing balances of the receivables. So in a question normally, where the details of income statement is given, the details are given with regard to sales, with regard to the materials consumed, employee benefits and other expenses like depreciation, insurance premium, income tax, and from the total revenue, the total expenses is deducted, claimed, and the balance is arrived as and shown as net profit. So normally income statement and balance sheet details will be given in question for calculating cash flow from operating activities. So first let us start with calculating cash received from debtors. If you look at here in this question, there is no information with regard to cash rates, but generally it is given as a revenue from operations as rupees 2,20,000, and receivables, opening and closing balance is given. So using this information, we have to calculate cash received from debtors. So if you are comfortable with the ledger method, so in case of trade receivables ledger, receivables account, if you prepare the account, normally it is a balance sheet asset item, so opening balance on the debit side, opening balance to opening balance. Receivables given as rupees 33,000, and by closing balance 36,000. I am just entering. And sales is given as rupees 2,20,000. So to credit sales, I am presuming all sales as credit sales. So I am just closing this. This is opening balance, which is on 1/4/14, and this is on 31st March 15. So the total will be 2,53,000. We balanced with the amount on the credit side, 2,53,000. So it should be, balance should be 2,17,000. So this is nothing but by cash from debtors. So this is a cash aspect. This will affect the cash flow statement. So people who are comfortable with the ledgers can calculate cash from debtors like this, taking into account opening balance. So asset item, receivable is normally a current asset. Normally current asset, it will appear in the debit side of the trial balance and asset side of the balance sheet. So we have to enter the opening balance on the debit side and closing balance on the credit side. And trade receivables account debit to sales account. This is 2,20,000 given in question, and we close the ledger. We find that the balance is rupees 2,17,000. For people who are not comfortable with the ledgers, how this debit comes and all these things, you can go in for equation format normally. So in that case, cash from debtors is equal to opening debtors. Based on this ledger and preparing the equation, opening balance of trade receivables plus credit sales minus closing balance of trade receivables or debtors. Trade receivables and debtors. In case of the segregation given in question, some part can be debtors, some part of debtors may be based on bills. So in that case, bills receivable and debtors may be segregated and given in question itself. In that case, you have to combine both the amounts. Suppose it is 28,000 is your debtors and 5,000 is your receivables. Totally, you can take 33,000 as opening balance. In that case, here in this question, it is not given no split given. It is simply given as 33,000 as receivables. I am just taking it as opening balance. Along with that, I am adding. So 33,000 rupees 33,000 plus rupees 2,20,000 minus 36,000. The amount will be rupees 2,17,000. So we managed to get one important information for calculating cash from operations. So what we are trying to calculate here, we are going to calculate cash from operations or operating activities. So this is first and foremost calculation. Working note number 1. You can take this as working note number 1. Okay, we have calculated cash from debtors. Now, the second aspect is we need to know how much amount paid towards suppliers. For that, we need to know purchases. If it is in equation format, if cost of goods sold is given or cost of material consumed is given, based on which you can calculate purchases. So, normally cost of materials consumed, ledger, if you prepare in the form of equation or in the form of ledger, cost of material consumed can be prepared like this, can be calculated. If you prepare in the form of ledger, materials consumed, so you will be taking opening stock here to opening stock. Again, you have to prepare stock ledger. Okay, you have to prepare to find out the materials consumed. You have to consider the opening stock and closing stock. By closing stock, being asset item, opening will appear on the debit side and closing will appear on the credit side. So opening stock given in question, inventory is nothing but stock. So 22 and 27,000. So 22,000 and 27,000. So two purchases is not given, which we have to calculate, which is missing. But materials consumed is given by materials consumed. Is given as rupees 1,20,000. Here it is 1,20,000. So I'm just using or crediting the amount 1,20,000. So I close the ledger, find out the balance 1,47,000. minus 22,000. So it should be 7 and 1,25,000 is your purchases. So this is the missing information. Purchases is 1,25,000. So if it is to be arrived in equation format, how this has to be done? Cost of material consumed is equal to, the normal formula is opening stock plus purchases minus closing stock. So material consumed given in question is 1,20,000. Opening stock given in question is 22,000. Purchases we do not know. Minus closing stock, which is 27,000. So by simplifying the equation, by adding 1,20,000 with closing stock, so you can calculate. So if you simplify equation, you will get purchases. If you take out purchases and simplify it, it will be rupees 1,25,000. Now we have calculated purchases using, so the purpose of calculating purchases is to find out cash paid to suppliers. So this you can take it as working note number 2. So we have calculated purchases. So when it comes to purchases, there can be cash purchases as well as credit purchases. When the question has not given any information with regard to cash purchases, we have to presume. And when payables are there, that means trade payables, employee benefit expenses, maybe outstanding expenses may be there. That is different. It's also payable. Prepaid, paid in advance. Tax outstanding, it is due to be paid. Opening and closing balance is given. Whereas trade payables are nothing but towards suppliers. Amount due to suppliers or creditors. So let us now find out how to calculate cash paid to creditors. So calculation number 3, cash paid to creditors. If you are comfortable with the ledger, we can prepare ledger for creditors. So creditors being liability credit side item and balance sheet liability side item. Opening balance will appear on the credit side and closing balance will appear on the debit side. Okay, so by opening balance, the amount of creditors 17 and 15. So 17,000 and to closing balance 15,000. Then by credit purchases, we have calculated it here 1,25,000. Without knowing purchases, we can't calculate paid to creditors. So first we have to calculate the purchases. Then the amount of purchases to be credited here in creditors ledger. So if you close the ledger now, you will have a difference of this 1,27,000 cash paid to suppliers. So to cash. So creditors account debit to, so debit the receiver, credit what goes out. So paid to creditors. So this is an important, so if you prepare it in the form of ledger, if you are in a position to understand through ledgers, then it can be calculated like this. If you are not comfortable with the ledger, you can go in for equation. So cash paid to creditors. The equation can be credit purchases plus opening balance of creditors or trade paid. Creditors also, I think here in the question it is mentioned as trade paid. So means the same. So payables, trade payables. So trade payables. Trade payables minus closing balance of trade payables. So substituting values here, credit purchase is 1,25,000 plus opening trade payable 17,000 minus closing trade payable is 15,000. You will get rupees 1,27,000. By simplifying the equation, you will get 1,27,000 as cash paid to creditors. So if you are comfortable with the equation, you have to by heart the equation. So for always calculating cash paid to creditors, it's going to be credit purchases plus opening balance of trade payable minus closing balance of trade payable. Or you can understand it in the form of ledger. So this with regard to cash paid to creditors. Now expenses. So we have already calculated cash received from debtors, and using the amount of purchases what we calculated, we arrived at cash paid to creditors. So the stock was one of the important information. By taking into account the opening and closing stock, and adjusting with the materials consumed, we managed to get purchases. We move on further now. It is employee benefit expenses. It is actually 30,000 rupees is claimed as an expense. It is not cash paid. Okay. Whereas the question is given employee benefit expenses 2,000 and 3,000. So how the cash paid towards the employee benefits? Cash paid towards employee benefits. If you prepare ledger, outstanding employee benefits account, employee benefits outstanding account. Outstandings are normally liability side item or credit side item in trial balance. So opening balance will appear on the credit side. So they are like creditors. Creditors are suppliers of goods on credit. Okay, it is payable, nothing but trade payable. Here it is payable to employees, employee benefits outstanding, due to be paid. So employee benefit expenses outstanding 2,000 and 3,000, opening and closing balance. So by opening balance 2,000 to closing balance 3,000, and the amount claimed in income statement as expenses for the current year is given as rupees 30,000. So this should be debited to the P&L account, means here it should be credited by P&L account. That is, expenses claimed towards employee benefits is rupees 30,000. So by closing the ledger, you get the amount of cash paid to cash account, 29,000. So this is your balancing figure. This is your balancing figure. So more or less for credit items, the method remains same. Opening balance appear on the credit side and closing balance appear on the debit side. So you can do this in the form of equation also, the similar type of equation what we applied for cash paid to creditors. So here cash paid for employee benefits is equal to expenses claimed as per P&L account plus opening balance of outstanding employee benefits minus closing balance of outstanding employee benefits. So substituting values, so 30,000 is your amount claimed in P&L account or in the income statement. Opening balance is 2,000 minus closing balance 3,000. So you can either follow ledger method. If you are comfortable with the ledger, you go according to the ledger method. Or you have to understand in the form of equation. You can by heart equation and you can easily calculate. So in that case, your balance will be rupees 29,000 cash paid towards. This is your answer. This is one of the answers. These are all answers. Whatever is indicated in a box is an answer. So workings number 4 is over. This is with regard to cash paid towards employee benefits. Now what else is left in the question? Depreciation is a non-cash expense. We cannot consider it because when you prepare it using direct method, we are preparing it using direct method, means all cash aspects are to be considered. So there is no scope for non-cash items. Depreciation is a non-cash expense. It is just a book entry. Cash will not move out of the firm. So we are preparing it in the. If we do it in the indirect method, we have to, whatever money debited as depreciation should be added back to arrive at the cash balance. Okay. Now we are doing it based on the direct method. So we have to ignore depreciation because it is a non-cash expense. Then we move on to other expenses. Insurance premium. Insurance premium claimed as expense this year is rupees 8,000, whereas prepaid insurance is given as opening balance and closing balance. That means this year we have not entirely closed it. The account has some closing balance, and the previous year closing balance becomes opening balance for the current year. So using this information and the amount of expense claimed for the current year, we have to calculate exactly the amount of cash paid towards insurance premium for the current year. Cash paid towards insurance premium. So prepaid insurance account. So people comfortable with the ledger can understand it through ledger format. So prepaid insurance being asset item, opening balance on the debit side and closing balance on the credit side. So the amount being 5,000 and 5,500. 5,000 and 5,500. And by P&L account, that is expenses claimed this year towards insurance premium, given in question as rupees 8,000. So this is the amount 8,000. So this I am taking as current year expenses claimed. So by closing the ledger and calculating cash paid, so rupees 8,500. So this is to cash. So this is opening balance on 1/4 and this is on 31st March. And this is also on 31st March and this is also on 31st March. So now cash paid is calculated. This is the answer. This is arrived as balance figure. So people comfortable with ledger can do like this. In case of equation, is cash paid for insurance premium can be calculated taking into account insurance premium as per P&L account, plus closing balance of prepaid insurance minus opening balance of prepaid insurance. So 8,000 substituting values in the equation. Closing prepaid is 5,500 minus opening prepaid is 5,000. So rupees 8,500 is your amount of cash paid for the current year towards insurance premium. Similarly, tax outstanding. So income tax claimed for the year is rupees 10,000, whereas tax payable outstanding is given as 3,000 and 2,000. Again, we need to have a separate ledger for calculating cash paid towards tax. So first let us do based on the ledger method. Outstanding tax or tax payable account. Outstanding tax account. So all outstandings are normally credit side item of the trial balance, means liability item in balance sheet. So opening balance on the debit side. So by opening balance to closing balance. So opening balance given in question 3,000 and 2,000 as opening and closing. 3,000 and 2,000. And expenses claimed this year to be credited by P&L account 10,000. So that means totally 13,000, of which 2,000 is closing balance. That means 11,000 is the difference. 13,000 minus 2,000, get 11,000. This should be taken as to cash. That is cash paid towards tax for the current year. So this is amount claimed in the P&L account or the income statement. Whereas here it is cash paid. So we need only the amount of cash paid. In all these, why do we prepare all these ledgers? We are by preparing ledgers, we are attempting to calculate cash aspects involved in all these expenses or transactions. So if it is in the form of equation, it's going to be cash paid towards tax is equal to tax as per P&L account plus opening balance, outstanding tax or tax payable account minus closing balance of outstanding tax. So substituting values here, 10,000 is claimed as expense for the current year. Opening balance is 3,000 and closing balance is rupees 2,000. So it is going to be rupees 11,000 as your cash paid towards tax for the current year. So we know now all the cash inflow. Cash inflow is only from cash receivable. This is inflow. And these are all using purchases we calculated cash paid to creditors. This is outflow. Cash outflow. Paid to employee benefits also outflow. And paid to insurance premium also outflow. So by comparing, and paid towards tax is also outflow. So by matching the sum total of all the outflows against the inflow, we are going to find out cash generated from operating activities. Now we go to the answer. Statement showing cash from operating activities. Already we discussed the format. First we have to consider the cash received from debtors. Already we have calculated it, which is in working note number 1, 2,17,000 to be taken over there. Cash paid to creditors. As per working note number 3 is 1,27,000. Then cash paid towards employee benefits. This 1,20,000. Sorry, it is 29,000. Cash paid towards employee benefits is 29,000. So, cash paid towards insurance is 8,500. Then at last, cash paid towards tax, that we can separate it, we can calculate it, we can deduct it separately. So from out of 2,17,000 of cash received from debtors, we have to subtract cash paid to creditors, which is 1,27,000, and 29,000 towards employee benefits and 8,500 for all these numbers are taken from the respective calculations or workings. So if you subtract the sum total of all these payments, all these are paid, you must try to understand, paid. This is received from the total of receipt, you have to subtract all these payments and you will get a balance of rupees 52,500. So this is before tax, cash inflow before tax. From this less income tax paid. So there is always difference between tax actually paid by cash and the tax expense claimed in the income statement. So we are doing this based on the direct method. So whenever we do it in direct method, we should consider only the cash aspects. So all paid and the receipts are to be taken. Payables and receivables have no scope here, cannot be considered. So 11,000 to be reduced. And the balance will be rupees 41,500 is cash inflow from operating activities. I hope you are now in a position to understand as to how to calculate cash from operating activities by preparing necessary ledgers or using the